Alright guys, Raishiro here, and today we got another video on our portfolio. So basically, Acid Recovery said in the comment section, he asked, or he said that next time you invest, why don't you tell us what you're choosing and what I'm investing in. And so in this episode, we're going to reiterate what we're doing and what our strategy is. Also in this video, I want to plant a seed basically inside your guys' heads on what possibly might come or what's currently in my head, so you guys can basically pivot off of it. Or if not, just give me your thoughts on what I'm saying. Also guys, and especially Acid Recovery, these comments mean a lot to me. When you're a small content creator, 5 subscribers, 17 views, these videos, even if you guys think they're small and they didn't take much to make, people like me don't like talking, and making videos, it's like, wow, you don't like talking and now you're talking in front of a camera, in front of an audience of, pretty much the whole internet, if the whole internet watched your video. It's really hectic. There's a lot of anxiety, and basically it's really demoralizing when you make a video that took 2 hours or more to make and then you get 17 views. But I'm not complaining. It's something that every content creator goes through and experiences. So when if anyone makes a comment on a video, even if it's positive or negative, if you see the notification on your phone that someone commented, you get really happy. So shout outs to Acid Recovery, and if anyone else has questions, ideas, or anything, feel free to comment in the comment section. Now, going to my portfolio. So guys, currently we're sitting at $1,800 inside the stock investing portfolio on Robinhood. It's a pretty boring portfolio, guys. Remember, we only got 5 positions right now, and everything is on recurring investment. Every week I got $200 from my paycheck going into this portfolio, and of that $200, 15 plus 25 plus 10 plus 20 is $70. So every week $70 gets invested automatically into the stock market, while $140 per week gets saved in my buying power. And I'll explain later why I got this much in my buying power and why I'm only investing 70 of the $200 every week. So again guys, currently we got Realty Income. Everyone knows this company, the monthly dividend paying company, and I think there's opportunity here because I don't think the company is going to go under, and Realty Income is basically real estate, and real estate revolves around the interest rate. Interest rates went from 3% to 7%, so everything they do, when they borrow money to buy new properties, they pay more in the loan and in the debt. And essentially this means less profit for the company. So when interest rates go up, people are not inclined to buy the company. They might even sell the company. And things that go up do come down, and that works with the interest rates. They go up and they go down. They used to be 20%, and at one point they were at 2 to 3%. So ideally, if you think this is an opportunity, if you think the interest rate will obviously go down eventually, then the intuition and assumption is once those interest rates go down, then this share price ideally would go up. SCHD, it's a solid ETF. There's nothing more to say there. VOO, the whole stock market. We aren't adding more shares to VOO. We just bought it there to have it in the portfolio, but eventually we will add more. And these two right here are covered call ETFs. They are more speculative. Right here, nothing special. We got the most amount of money per week going into Realty Income at $25 because I believe it's an opportunity. SCHD is the next best thing at $20 because, it's a solid ETF. So this is going to be like a stable position in the portfolio. And these two right here are more on the speculative side. We don't know if they will do good in the long term because these two are like 2 to 3 years old. So, it's a gamble basically. You don't want to use the word gamble in investing, but it's a gamble. But again guys, remember, I'm not using big money right now. I'm using 2 shares, 1 share, and only $10 and $15 goes into it weekly. It's not really much. Like if I started to really invest hard into this portfolio, then I'd probably add more into these positions, but it's not going to be a lot compared to Realty Income or SCHD, for example. But yeah, that's pretty much why I say the portfolio is boring. This stuff runs automatically. I don't really hit the buy button. It does everything by itself. Now, you guys wonder why I got so much money in buying power and not invested in the stock market. And again, I'm gonna keep reiterating to you guys that I believe that pain is coming inside the stock market, and that even though the government and everyone says the stock market is going up, the real estate market is going up, and we're doing really good, the economy is booming, I don't believe that at all. Again, guys, numbers can be deceiving, and you got your bulls, you got your bears. Some YouTubers think everything goes up, and some YouTubers like me are pessimistic and are more safe, and we think the market is going to go down. I hope you guys don't click off or say, I'm negative or anything. I hope you guys listen to why I believe the market will go down. And if you guys don't believe me, or if you guys have a counter argument, then please leave that in the description. I'll explain to you why I think the market is going to go down. And just remember, this was a quick video, guys, so we're not going to go hard into why I think it's going to go down, but we're just going to give you the breadcrumbs here. We can just look at the S&P 500, for example, the entire stock market. Currently, we're at all-time highs right now. And in the economy, things go up and things also go down. Things do not go up forever, guys. So right now, if you buy in right now, it can still go up and you can still make money. It's your financial decision. Well, I think we're going to go down eventually. And this is just a risk that everyone takes. Everyone has different risk tolerances. So am I saying stay out of the market? No, guys, because again, I'm investing $70 per week, but I'm saving $140 per week in buying power for if a crash happens. And if a crash does happen, I'll have all that buying power to buy into my companies right here. So basically, the buying power is to have the best of both worlds. I would have buying power for if times go bad. So again, right here, the belief is that things will go down eventually. And why do I think things will go down eventually? We can go look at McDonald's, for example. You guys will say, why McDonald's? Because McDonald's is fast food and most people spend money at these companies. So they would know because they got the data. And right here, you can read McDonald's plans to step up deals and marketing to combat slower fast food traffic. The Chicago burger giant said inflation-weary customers are eating out less often in many big markets. In the first quarter, fast food traffic was flat or down in the US, Australia, Canada, Japan, the United Kingdoms, and Germany. So basically, in the whole world right now, McDonald's is going down. So pretty much in the entire world, in most places, we're seeing that people are buying less fast food. Inflation right now is high, people can't afford things, and basically they're cutting back, and companies are seeing this in their profits because the profits are taking a hit right now. We can go here right now, and this article is really scary. Living paycheck to paycheck statistics in 2024. This is from Forbes.com. We can go down right here. $1 to $500. People who had money saved up, 8% had $1 to $500, guys. That's so scary because imagine your tire blew out and then you had to get your car towed. There goes your $500, and basically you got nothing in the bank right now. What happens if you have debt due and you can't pay it? Now your credit takes a hit, or what, you get kicked out by the landlord. But even then, 18%, 25%, 16%, that spans from $1 to $2,000. Got $2,000 in your savings account. If that's not scary, I don't know what is, guys. I'm saying this because this goes back to why I'm investing right here and why I got $700 in buying power. When things go bad for these people right here, they stop buying things, so the economy slows down. People start losing jobs. Companies don't make money. People at the companies don't make money, so they start firing and laying off people, and when that happens, more people don't got money to spend. Profits go down more, the value of assets go down, the economy crashes. This is why I'm saving a lot of money on the sidelines, and this is why we got a lot of buying power, and why after expenses I save basically everything from my paycheck entirely, because I think in the future a lot of opportunity will come. I keep telling you guys that the economy is going to crash. That's my belief. But the thing is, even if the economy crashes, I'm saying this not to scare you guys. I'm saying this as I see it as opportunity. Because when things go down, that's the time to buy in. We can look at more data, and we can see right here for the people that got polled, basically. High monthly bills for everyone, 50%. Lack of budgeting and financial planning, 46%. Low income, 43%. Guys, a lot of people don't got money. And the thing is, every 10 to 20 years, there's a big event that happens that makes a lot of people spend their savings and go into financial shambles basically. In 2008, we had the market crash. A lot of people lost their homes, and even though that's sad, that made opportunity for people who had financial knowledge and people who had money. I'm trying to set myself up for when a 2008 event happens again, then this time around I'll take advantage of that opportunity. You can see right here, 57% of millennials cited lack of budgeting and financial planning. Guys, this is why I want you guys, if you know anyone that doesn't know anything about finances, then please show them my videos, tell them to subscribe, and see how I go on my journey, because you guys will see how I navigate the market and how I plan to ideally inform people how to become better with money, but also how I'm trying to take advantage of the market. But the idea that 2008 happened, anyone who didn't have money to get things, they lost things, right? Guess what? That happened in COVID. The problem with COVID is I think there's a bubble right now. I keep saying I think there's going to be a crash because I think we're currently inside a financial bubble. 2020 happens, COVID happens, and a lot of companies and a lot of people should be bankrupt right now, losing their homes, losing their jobs. But what did happen? A lot of people got bailed out. A lot of students who got student loan debt aren't paying their debt off right now because of the moratorium. A lot of people should have got evicted, but instead they made it illegal to evict tenants. And guess what? A lot of tenants got to stay for free basically, but a lot of landlords got hurt. So again, this is a problem. This is a bubble that should have popped a long time ago, but instead the government prints money and they keeps making these government assistance programs, and they basically kick the can down the road. So a bubble that should have popped 2 years ago, 3 years ago, 4 years ago, it has not popped yet. But what I believe is happening is the cracks are forming before the pop happens. And right here with the McDonald's article, as we can see, fast food is slowing, inflation is high, and people don't got savings, as we can see with the data above. 2008 happens and a lot of people lost things. 2020 happens, people should have lost things, but they didn't, because a lot of people got bailed out with stimulus and whatnot. Trillions of dollars got pumped into the economy, but the cracks are forming, and eventually down the road something bad will happen, and we will be in a complete free fall. That's the belief, but it's not really a belief, it's inevitable. Bad things happen and things will go down. They can't keep propping things up forever. Eventually things will go down. You guys always see me say that the government says the economy is doing really good and Bidenomics is working. But the reality is, we can go to Bloomberg.com. We can see right here, United States small business rent delinquencies rise to a 3-year high. Small business rent delinquencies jump. Majority face higher rents, and 43% were not able to pay rent on time in April. Guys, 43% is nearly 50%. 50% is half. Half of small business rents that were polled by this, Bloomberg or whatever, they were paying rent late. This is really bad. So even if they're saying the economy is doing good, if 43% of companies can't pay rent, that's really bad. The key word here is small businesses. And so why is this significant? We can read right here. Small businesses are the lifeblood of the United States economy. They create 2/3 of the new jobs and drive the United States innovation and competitiveness. A new report shows that they account for 44% of the United States economic activity. So yes, guys, small businesses makes up a majority of the economy, and this is nothing to bat an eye at. They keep telling us things are good, but I think things are gonna go bad eventually. And again, guys, you need to arm yourself. I'm not saying with a weapon unless you do want a weapon, but jokes aside, arm yourself with knowledge and start reading things, start learning about things, get yourself prepared. This is why I'm saving for real estate right now in a high yield savings account. This is why I got a lot of buying power, even though this could be inside the market right now. Arm yourself with knowledge, so when things do go bad, then at least you can take advantage of it. Alright guys, I don't know if I'm going to edit this video much. If you made it this far into the video, then thank you. I'll post higher quality videos down the road. This video was more randomly put together, but I wanted to get my point across. And I mean, according to this article, this came out This came out April 2nd, and this one came out April 26th. So pretty much this month, meaning this is really recent. And again, cracks are forming, a bubble is gonna pop eventually, and you guys need to be prepared and you guys need to be ready to take advantage of the opportunity. Once more, shout outs to Acid Recovery for pushing me to make this video. Thank you again.